Today is 3rd March. I met an anomaly in my performance. I usually take one setup and then I'm done for the session because there's a risk that I might not be satisfied with a setup. Even if it's a good execution, it might be a loss. And after this, I might get into trouble because I will start revenge trading or looking for another setups which I'm not out to. But today I completely screw up for my setups and I took 3 setups when I was supposed to take just one, and that's it. Why? Because I want to win back. I didn't had a take profit for 2 or 3 weeks like a puma that hunts its prey for 10 days. I'm just like that puma. I'm hungry for a top or for a take profit. So I got mad at the market and I decided to take 3 setups and buy a setup. And I mean a good setup. I mean a trade that can give me 4 hour or more than 4 hour. And today I had the opportunity to take 4 hour at the beginning and I didn't. I wanted more than 4 hours. And then the outcomes were really detrimental for me afterwards. I considered myself to be very lucky because I took 3 break-evens in a row. In my data, it's unlikely that I take 3 break-evens in a row. That's the first time I experienced something like this. Anyway, let's get into the daily bias for today because the situation is very interesting. You see the geopolitical tension between Iran and the US are higher. Right now they are at war. When two countries, especially the US, are at war, price is going lower. So it was very logical to me to expect lower prices for today. But between this daily profile and the next daily profile, which I think probably started to print it at the opening, I don't remember exactly, and there is a huge gap higher than 2000 ticks. That's a lot. It's unlikely that it's gonna be filled like the entire ticks to be filled, but it's a possibility. So even if I'm more bearish today, I wouldn't disconsider any bullish setups. It seems to me that for today there was no significant news that could affect the market in any way. Before the New York Open session, the gamma ratio was somewhere around 0.20, but after the opening, it started to get lower and lower, and now as you can see, it, it reached even 0.3. That's very low. That's very low. And what does this mean is that there might be a lot of volatility, a lot of big moves, which is important. Now let me show you what I did with my execution, because today was really it's an anomaly for me, and I think this can bring a lot of value to any traders that is gonna see it. So the price opened right here, so the gap is still very large, around 1900 ticks above. As analyzing the price action and CVD, my idea was to go bullish for today. As you can see right here, the delta, the buyers are very strong and the pullback of the sellers is very weak, and so the absorption should be somewhere right here. As you can see with these blue cyan bubbles, it indicated that the sellers are not going to continue this move downwards, and so buyers are in control right now, and they even got above right here. Now let me show you my execution So it was somewhere around here. I entered here after I saw the absorption, and it was very clear to me that the price is going upwards. But I did something very stupid and I don't know why. So around here, I started to play much with the stop loss. I was very confident that the price will go up, and I'm very obsessed with the take profit of $2,000 because psychologically I consider that amount to be satisfying for me. So but then something happened, as you will see right here. Right here, this bubble would indicate that we must go higher, right? But we didn't. And after a while, the price started to slowly reject. What happened afterward? The price slowly pushed to my stop loss. Imagine from this point right here where the absorption occurred, I already had a trade with 400 ticks. 400 ticks, if you use 5 contracts for micro, is already $1,000 if I would translate it into cash. That's a lot. But I wanted more, of course. But the market didn't give me that. Then I was so insatisfied with my exit for today that I decided to trade once more. Yet my rule clearly stated that I shouldn't trade more than once, because it's likely that I'll revenge trade and look for very bad setups. And I don't know what happened today, but taking the second setup wasn't that bad, and I think it was somewhere around right here. Well, the market participants reacted at the same region of price, but right now they had the intention to take the price lower, yet they failed, and this happened. I think I entered here after I saw the price going upwards. I nearly lost the trade, but eventually the price got higher and the POC as well, which can indicate an interest in a higher move, but the price just oscillated and then it eventually hit my stop loss to break even. So even if I traded more than once, it wasn't a bad setup because I took it on absorption and in this region, which price mostly interacts, and I wanted more, so I took another trade. So I entered around here, and from this place, from this point to this point, and then getting back to this point where my entry was, I lost somewhere around $800. I lost the potential to win that amount of dollars. But anyway, let's go to the next trade. And in this situation, so there was another absorption. Sellers tried to push the price lower, but then a buyer interrupted the move. The price entered in a short consolidation and then it got higher. But the delta is weaker than the last move, which is this move. So after I see how the price consolidates, I decided to put my stop loss to break even eventually, because what the market was doing was just consolidating in this zone. So it was no use to bet that the market will eventually go up. So what happened to me today? I think I was so upset by the initial trade that I took it around here that I decided to trade again. So it looks like a revenge trading, and I like it to call it, I don't know if it's an official name for that, but whatever, I like to call it near miss revenge trading. And why it's called like that? Because the cause of this type of revenge trading is basically a potential win. But if I would have not move my TP, my take profit higher, and I would let it be right here, I would have taken $1,000 and end the day in green. So simple. So I didn't. I got mad. So I got mad at the market and I tried my luck again. At least I didn't trade it more than 3 times, and I was able to stop after seeing this move. It was no use for me to trade anymore. And while I think I had a good execution. Looking at my performance goals, there was something missing. I only managed to get patience checked because I waited for the opportunities to come off, and when the opportunity came, I decided to take it. Even if it wasn't really a bearish setup, if it's an absorption, it's still pretty good, and the execution was pretty good to say the least. As for temperance, which I define it as not giving in to excess, which basically means to control yourself or be the master of yourself, or simply controlling your impulses, I didn't. I didn't control my desire to trade more than once. So I didn't check for today this performance goal. As for equanimity, which basically means remaining steady or even mindedness under under stress response or random outcomes in the market, and I couldn't accept the outcomes, and this eventually led me to near miss revenge trading. So I didn't check box it. As for execution adherence, which basically means how much I executed today, it basically answers to the questions: did I execute well today? Did I follow my strategy? And I would say that I followed, but I traded too much. And lastly but not least, humility, which I define it as accepting that you don't know the outcome of the markets, accepting that you might not be right, and that's fine, and accepting uncertainty. And since that I was near missed revenge trading, I assumed that I clearly wasn't humble today, so I didn't check box that as well. Last but not least, I consider a refinement in my strategy, which is trailing stop loss, because this situation, it's not the first time that I experience this behavior called near miss revenge trading, and I think I can avoid it by moving my stop loss, by trailing my stop loss instead of taking a very fixed take profit like 4 hour or 5 hour. For now it's an idea. I might not add it in the following days. I'm still placing it in my change list for my strategy, and I might consider in the future if the pattern for today especially will reoccur.